Hi, everyone. Welcome to day 3 of the Synergy Traders number 49 Tech Wizards 2024 conference. With this event, we're bringing you the top educators providing actionable info on the software indicators, algorithms, apps, tools, and platforms that they use every day to make money in the markets. So this series is brought to you by Anka Metcalf of TradeOutLoud.com and myself, David Kosmeter of TimingResearch.com. And this particular event, along with our prime sponsor, TradingIndicators.com, and our co-sponsors, Mad Hedge Fund Trader, uh, Trades Trending, AltaVest, and Logical Signals. So, of course, these presentations are for educational purposes only. Trading is not suitable for all people. Please discuss this with a financial advisor and only trade with money you can afford to lose. And all sessions are being recorded individually and will be available on TimingResearch.com as soon as I can get them processed. So today, we get to open the day with Vince Vora of TradingWins.com. So it's great to have him here, and I'm going to go ahead and turn it over to him.
Great. Thank you, David. I appreciate it. Nice to be on and welcome everybody. Looks like we have a nice crowd and from all over the place. It's morning where I am, but I guess it's afternoon in Ghana. Welcome. Thanks for joining us. Today, I want to talk to you about my victory method. This is something that I created back in 2019. Just before the pandemic, I was expecting additional volatility in the market, so I wanted a system that would respond a little quicker to shifts and changes in the market. I had no idea the pandemic was coming, so it actually ended up working quite well. But let me start off by telling you a bit about myself. As David said, I'm Vince Vora. I'm the head trader here at Trading Wins, and I've been in this business, almost getting to the point where I can almost say 4 decades. So almost 40 years now. And I started out in the corporate world, on the floor and managing a group of traders, managing assets for clients and so on. And then branched out on my own. And through the years, developed several trading strategies and systems. My baby now, Victory, which is what I'm going to show you right now. And really, over the past many years, really focused on coaching students. So it's been a lot of fun. Before we go any further, I do want to say, please, trading can be risky. So please don't trade with real money until you're completely comfortable with the system you're using. And I do want to stress, we are not trading advisors here at Trading Wins. What we do is teach and empower people to do this on their own. That's what we do. We're educators. And like I said, been doing this for a very long time. So I'd like to show you what we have been trading with here now. So what I plan to cover in our session today is I will go through our money management rules. What I promise for you here, there are 5 simple rules. And when you see them, you're going to be a little shocked that some of them are actually rules. But those 5 simple rules will guarantee, and yes, I did say guarantee, if you follow those 5 rules, you will never take a big loss in the market again. How many of you here have taken big losses before, if you don't mind sharing? It's very common. I myself, when I first started out, took some very, very sizable losses. I thought I knew more than I did. Obviously, I didn't know what I didn't know. So, there were risks lurking that I wasn't even aware of. And, it was expensive way to learn. It really was. So I hope what I can show you here today will prevent you going through that. If you have already, hopefully what I show you will help you recover those losses. Okay. And then I'm going to talk about the components of the system, how it came together, how it works and why it works, but more importantly, how it can work for you. Now, if you have questions throughout, please type them into the chat. I will do my best to keep an eye on it. If not, we'll hopefully get to it at the end of the session. Okay. So let's get into the money management side. Now, when you're trading, a lot of people really focus on, entries and exits. They think if you have the perfect system for an entry and an exit, you're going to make money. That's really not true. You need a full trading plan, which includes and the money management portion. And this is what I believe is the most important portion here. So there's 5 simple rules. You may have started to read this. Some of you may have laughed at the first point or two. Let me explain what I mean. So trade with a positive mindset. Well, it's more than just positivity. What I mean by that is if you sit down to trade and you're not completely focused, or you're feeling a little under the weather, that sort of thing, distracted, you have other things on your mind, that is when you're prone to making mistakes. And in this business, when you make a mistake, you lose money. So you need to be prepared to trade, be focused, block out all other distractions, have a positive mindset, and then sit down and follow your plan. What you want to do is trade with an amount that feels completely insignificant to you. I'm sure many of you have heard people say, hey, try not to bring your emotions into trading, right? That you need to trade like a machine. You need to remove all your emotions from trading. Well, unfortunately, I have some bad news for you. You're human. It's going to be impossible for you to remove your emotions. What you need is a solid set of rules that prevent your emotions from impacting your trading. And again, if you follow these, it's simple math. You cannot help but protect yourself if you follow them. The only way you won't be protected is if you break the rules. So, if I asked you to put $5 in a trade, would any of you here be worried or lose sleep over it? I'm guessing not. If I asked you to put 50,000, 500,000 in a trade, many of us would worry, stress over that, lose some sleep, be concerned. That's where our emotions would come in. So a starting point, especially if you're just learning, if you're new to this business, a starting point is trade with an amount, regardless of how small that might be, an amount that feels insignificant to you. It's going to be different for some people. For some of you, 50,000 might feel completely insignificant, but for others, it may be $50, right? $500, whatever it is, trade with an amount small enough that will prevent you from being anxious or making mistakes based on those emotions. Now, here's where the math comes in. So for me, what I recommend and what I do for myself is you only trade with a certain percentage of your overall portfolio in any one trade. On the slide, I have 5%. That's a starting point. Okay. No more than 5% of your account balance in any one trade. Now, as you grow your account, I would highly encourage you to reduce that. Go from 5 to 4.5 to 4, 3.5, all the way down to 1%. When you can have only 1% of your account balance in any one trade and still have a sizable trade on, that's when you know you've made it in this business. So think of it this way, even at 5%, if the trade completely blows up on you, right? There's some bad news, there's a gap against you, whatever it is, it completely blows up on you, you lose 5% of your account, no more. You will live to trade another day. That's what it's about here, especially when you're starting out and learning. Okay. And you only want to start at 5% if you have a smaller account, right? But the bigger your account, the lower the percentage. Okay. Goes into any one trade. Now, the other thing is that I myself keep half of my account in cash at all times. Now, that may sound crazy. You may be thinking, how is that money going to work for you? Why would you keep it in cash? Well, because there are things in the market that we cannot control. Think back to 9/11, right? No one expected it. No one could have anticipated it, nor could anyone do anything about it when it happened, right? Planes hit the tower before market didn't open, it remained closed the rest of the week. When it opened the following week, it opened 50% lower than where it was. So you couldn't sell, you couldn't get out, you had no control whatsoever. You would have lost half your account there. So by only putting half your money to work, you always have another half that, should something like that happen, you can put back to work and make that back. Now, thankfully, those events are very rare. Hopefully, we never see another one. But this way, this is how you're going to protect yourself. So if you're putting 5% of your account in one trade, and you're only putting 50% of your account at work, you should have a maximum of 10 trades, no more, right? If you're putting 1%, then you can go up to 50 trades, right? It's a simple math. And another very, very important piece of this is how or when you take your trades. What I highly suggest is that you spread your trades out. So I trade mostly on the daily time frame. And what I try to do is every night when I do a scan to look for new trades, all I'm going to open the next day, regardless of how many great looking trades there are, is open one, maximum two, no more than that. Why? Well, usually if the market is up strong, say the Dow is up 300, the S&P is up 40, the Nasdaq's up 200, you're going to get a lot of setups on the long side, and vice versa. If the market's down strongly, you're going to get a lot of setups to the downside. But a lot of times we've seen the very next day, the market reverses course, pulls back. If you went out and put on 6, 7, 8 trades at a time, you'd immediately find yourself in a big hole. So you want to spread it out. So what you want to do, and I'm going to show you a system that has been working great for me. But what the goal here is to identify the number of potential setups and then compare one to the other and select the one or two that is the best of the best. So 5 simple rules. Don't be distracted. Don't trade when you're not feeling well. Have a positive mindset. Make sure you're focused when you sit down to trade. Trade with an amount that feels completely insignificant to you, and you can use the math of rule number 3 here, which is no more than 5% of your account in any one trade, hopefully lower than that, less than that. Always keep 50% of your account in reserve and spread your trades out. I can guarantee you, if you follow this, you will never take a big loss again. Like I said, when I first started, I had some very sizable losses. Since then, since I put together these rules, never again have I had a big loss. Have I had losses? Yes, of course, they're a part of doing business, but never a big loss. Now, a couple more tidbits here. For those of you just starting out, your goal at the beginning should be to grow your account as quick as possible. Okay. And the reason being, even with little gains, the reason being is it will give you more confidence in the system that you're using, but more importantly, confidence in yourself as a trader, which will take you a long way. So at the beginning, instead of trying to squeeze out every dime of profit in the trade that you're in, when you have a profit, you take it and you pad your account and you try to build it up so that you can get to the point where you're really playing with house money, right? You're playing with the profits only. That way, you'll be a lot more relaxed. You can focus a lot more on your plan and executing your plan, and it'll actually speed up your path to being a consistently profitable trader. The losses, the mistakes at the beginning are a lot more painful, a lot more difficult to overcome compared to when you've become a consistently profitable trader. You have that confidence and you understand the market much better than you do when you're starting. Now, if there's one thing I want you to take away from this session today, it's this next point. It's not whether you're right or wrong that's important, but how much money you make when you're right compared to how much money you lose when you're wrong. In other words, again, going back to money management, how you control your risk and your losses compared to your gains is everything in this business. You need to cut your losses very quickly, keep them small, and allow your winners to run. And I know it's easier said than done, but I'm going to give you a method to do that. Okay. But if you're in this business to try to be the world's greatest stock picker, I can almost guarantee you are going to lose money. It is not, the question I get asked a lot, and you guys can chime in here. Whenever I meet someone or I'm on these sessions, one of the main questions I always get is, what's your win rate? Right? I can tell you that the win rate matters very little when you look at trading this way. keeping your losses small and allowing the market to give you the wins when you catch a run. I worked with an individual many, many years ago that had a 38% win rate. That's it. He only won 38% of his trades, but he went on to make millions. Why? Because all those other losses were so small compared to his wins. Okay. And so now let me talk to you about Victory, the system that will help you do that. But remember, it is a complete plan. You need rules for money management, you need rules for entries, exits, and you need a way to track your trades. Let's get going. So, components of the system. This system is based solely on technical analysis. It is the things, the culmination of everything I've learned over my 35 plus years. And it is very, very simple. It only involves a couple of indicators that behind the scenes, when they line up, they will trigger a buy or a sell. Those indicators, when they align, it is impossible to miss a trend. I'm going to show you on the chart exactly what it looks like. The main benefit here also is that when things start going against you, it will get you out very, very quickly. Okay. We have tested this extensively, not just in North America, but on other exchanges as well, on the Nifty in India, in Australia, the UK, in Hong Kong, Tokyo, all over the place. Okay. Tested extensively, works exactly the same. Any time frame. If you're a day trader, 1 minute, 3 minute, 5 minute chart, doesn't matter. Daily, weekly. If you're an investor with the monthly chart, works just the same. Futures, Forex, crypto, anything you can chart on. So let me show you. But before I get to the charts, what was this designed for? Again, the main reason for this was to be more responsive, to catch the shifts in the market, but mainly designed to catch big moves. The good news is it still allows us to keep our losses small without capping our gains. Usually in the market, with risk comes reward, right? The higher the risk you take, when you're right, the bigger the reward, right? So usually when you lower your risk, you're capping your potential gains. What I'm about to show you does not do that. It will keep your losses small without capping your gains. So it maximizes the safety component in any trade. So what can it do for you? Like I said, if you're a short-term trader, it'll help you identify some great short-term trading opportunities as well as swing trading opportunities. If you're more of a longer-term trader, again, some pretty massive long-term trades. I'll show you on the monthly chart. It's pretty impressive. And more than that, it can help you predict or identify the current trend in the overall market. And that's where we're going to start. What I like to do is start, from top down. Look at the overall market, assess, are we in a bull market? Are we in a bear market? Or are we somewhere in between? And then lower the time frame and find trading opportunities from there. So let me bring up my charts. Enough with the slides. Any questions on that, by the way? Let me know. Again, if any of that did not make sense to anybody or they have questions, jump on in, let me know. Also, I'd like this to be as interactive as possible. So as I go through this and I explain the system, if there's a symbol that you want me to bring up, something that you like to trade or you're thinking of trading and you want to see, how this would have performed on that symbol, by all means, type it in. And I'd love to bring it up. So what you're seeing here is a chart of the Qs or the NASDAQ 100. This is the ETF for the NASDAQ 100. And this is a monthly chart. Okay. The reason why I'm on the monthly is, like I said, I like to go top down. So the overall market, whether you're looking at the Dow Jones, and you can look at the futures or the ETF, charts are going to look identical. Okay, the S&P 500, the Nasdaq 100, or you can look at IWV, which is the Russell 3000. The Russell 3000 has about 90% of the stocks traded in New York. So it's a very broad index. And so it gives you a picture of what the market is doing overall. Okay. Now, what you're going to see on this chart are buy signals, what we call re-entry signals, and then some sell signals and sell re-entries. And then every once in a while, you'll see yellow bars. Okay, so let me explain what those are. The buy signals, obviously, the algorithm is telling you that it could be a good time to buy. Now, before we go any further, I do want to tell you that the intention here is not to take every single symbol, although we've tested that. If you take every single symbol in the long run, you still should come out ahead, but that is not the intent. The intent is to pick the trades that give us an edge, the trades that we consider to be very high probability of success on those trades. And I'll explain as we go through. So initially, what you're looking for is a buy, okay, or a sell for short trades. Now, what are the reentries? The reentry means that the exact same algorithm that came together here, those indicators that lined up here, are doing so again here. The reason we call it a reentry is because we're already in a trade. And you'll notice that once we're in a trade, every single bar is colored the same, right? Regardless of up day, down day, they're all colored the same. That is intentional to keep you disciplined enough to stay in that trade, not to get scared out of the trade. Okay. Now, you can enter on the buy and exit your position on any color change, whether it's red or yellow, whatever, any color change and exit. But what I would also recommend, and hopefully we have time to get into more of this, is to scale out of your trade. Okay. Once we get in, before we put on any position, what we encourage our students to do is identify a stop loss area and identify 2 overhead targets. So the intent here is you buy, you mark your stop loss. If you hit first target, you take a third of your position off. You hit the second target, you take another third off, and your third, you let that run until there's a color change. Okay. As you go through this, you'll see these trades kind of pop out at you as I flip through the charts. And I thank you, everyone who put in a symbol. I'm going to get to you. The Tesla, Palantir, etc. We'll get to you. So the cells are the exact same thing, right? If you see a cell, it's telling you there may be a short setup. Again, there are rules that I'm going to explain that would disqualify these ones here. And then the yellow bars mean you should not be long or short. You should be on the sidelines waiting for a new entry. The blue line here, I'll show you, is a simple 20 period moving average. Just a simple MA, not exponential, not weighted. And for those of you who may not be aware, the exponential means that it gives more weighting to the more recent candles compared to just averaging the last 20 out overall. But the reason why we use the 20 MA is for momentum. What we're trying to do is trade with trend and momentum on our side. When you're trading with trend and momentum on your side, your likelihood of success goes up dramatically. So the victory system will identify and help you read when there's a clear trend. The 20 will help you identify when there's momentum. How do we do that? With the degree of slope. So the 20 could be completely flat, right? Or it could have a bit of slope, or it could have more slope or even more dramatic slope. What we want is for it to be sloping in the direction of our trade. So remember how I said this sell signal will not qualify? Well, that's because the slope is going in the opposite direction. For a short, we want it to be sloping lower. For longs, we want it to be sloping higher. So as I flip through these charts, the areas I want you to focus on are the areas where there's signals and slope on that 20. The other thing we want is for the entry to be near the 20. Why? Because when we pull away from the 20, it tends to snap back. So if we bought up here, we'd be risking a move against us immediately, which we want to avoid. Okay. So we want to take entries near the 20 with slope. The other thing is, not a lot of congestion overhead or support and resistance. Now I don't want to get overhead or ahead of myself here or overwhelm anyone who's just starting out. I'll explain some of that later. All I want you to focus on are three things. I want you to look for a symbol that is near the 20 and where the 20 is sloping in the direction of the trade. So here, like I said, monthly chart. We are only looking at the monthly here for the direction of the market. So are we above the 20? Are the candles green? Because victory was signaling a buy. Yes. So we're looking for long trades. If it was this time in the market, we'd be looking for short trades. Okay. We can go back to the weekly. All right. And you can see that here currently we're above the 20 and we're sloping. So then I would go back to the daily where I trade, and these are the trades I'm looking for, right? So for example, this one here, does this qualify for what I was talking about? We get a buy signal, right? Are we close to the 20? Yes. Are we um uh, do we have slope on that 20? Yes, we have pretty good slope. So this is a trade we would look to open. Now, one rule we have is that we mark the high of that setup bar. We allow this bar to close. We mark the high. And if price pushes through that high, I usually wait 2 candles, no more than that. If it goes through that high, then we enter that order. So in this case, we would not have entered the very next day, but we would on the second day here. Now, here's that safety component. Okay. Everything looked great on this trade, yet it didn't work out. We got a change in color here. We'd be out on this yellow bar. So very small loss, right? It happens again here. Not as much slope on that 20. In fact, you can say that it's even flat here. Now, this trade still qualifies, and I'll go through that rule in a second. But on the second run, not only does it move in our favor, pulls back a little. Now we have a re-entry. How do we handle re-entries? Well, we can just use them as confidence that we should stay in the trade if we're more conservative. But if we're more aggressive, we can now add to our trade. So if we bought here, we can buy more here and let this run. So this is exactly what I was referring to with the money management rules. You need something that'll guarantee a small loss. Number one, the system itself will get you out very quickly if it starts going against you to try to keep your losses small. But we know that we are still susceptible to gaps, right? Where overnight there could be some bad news and the stock opens down here. Look at this here. This was a gap up, right? You closed here. There's some news, something positive. Market opened higher here. It didn't open where it closed the prior day. It opened much higher. The same can happen against you. This is why we have those 5 money management rules where you don't put any more than 1 to 5% in any one trade, right? You keep half your account in cash, you spread your trades out. This is how you protect yourself. And a small loss like this can easily made back by a win like this. Actually, many of these losses can be made back by a win like this. That's what it's for. On the flip side, how do we handle sell orders? Here's one here, right? You have the sell signal. You're near the 20 and you have slope in the direction of the trade. So once this bar closes, we mark that low. The very next day it crosses, we enter immediately and off it goes. Now, where would our stop be? Our stop would be up here just above the high of that candle. The first target would be at a prior low and then at another prior low. And then the final third, we let it run. In this case, it snaps back, exits out. Our first 2 targets would be hit. Our final would be more or less maybe a small loss here. So overall, a winning trade. And we try to repeat that over and over again. And if you go and look at the areas where the signals have slope, you just look at how many are winners compared to how many are losers. Many more winners than losers. And these closes in the opposite direction, for example, these green candles, right? We avoid these losses by that rule of having the slope in our direction, right? It turns green, where's the slope? It's opposite. So we ignore it. We don't get caught in that. Where traders lose money is areas of consolidation, okay? Where that stock or that whatever market you're trading is just chopping back and forth. That is where you get in, you get stopped out. You get in, you get stopped out. You get in, you get stopped out. Over and over and over again, traders give back all their money like that. So one way to avoid that is just look at that 20 MA. It's flat in here. That one rule would make us avoid all of this chop, right? And then here we get a buy. There's slope now. We're near the 20. We look to our left. There isn't a lot of congestion, and off we go. We add here, off we go. We add more, off we go. And, as we hit our targets, we're taking some off. We're re-adding some on here. And then any color change, we close the full position. Not a third, not 2/3. We close the full position on any color change. Let me show you some of those symbols that you're asking for. Tesla. Okay? And we can look at all different time frames. All right. So again, we're looking in here. So in this messy area, are there trades we're going to take? Yes, there's some. Most would be ruled out by those rules. The areas where it's trending strongly, these are the easy ones to pick out. So when you're first starting out, these are the ones you want to focus on, the ones with a high degree of slope, right? So would you get in immediately on this cross? No. There's absolutely no slope whatsoever. Now, there is another method to enter right around this area. I'll get to that in a moment. But if you just ignore it, so you missed this original move. Not a big deal. It's not about what you miss. It's about the ones that you catch. Now, it gives you a buy. Is that a good buy? No, the slope is against us. So we ignore that. Now this sell here, slope is in our favor. We're near the 20. We mark that low. We get in the very next day and boom, off we go, right? It pulls up. We exit. Gives us another sell. It triggers. Off we go. We exit the full position here, right? And that's what we do day in and day out and try to repeat. Now, here's a couple of examples of how, because I'm sure, and again, please type in the chat, have you been thinking, hey, how do I get this full move here from the very bottom or from the very top? How do I make sure I don't miss that, right? There's a couple of other rules that we use to allow us to take advantage of those trades as well. So when you get a cross or a signal, I should say, like a buy signal, where the 20 is not sloping in your direction, okay, you don't immediately rule it out. You're looking for one of two things. One is you're looking for a move above a previous pivot high. So in this case, since this was, a falling knife, a very strong move lower, didn't really leave pivot highs up until up here. So we're not going to be able to say, hey, we closed above a prior pivot high. But the other rule is a retest of the 20. And what I mean by that, and maybe I can zoom in a little here. Yeah. So here's the buy signal. What I mean by a retest is sometimes you move a little in that direction, then you come back and you bounce off that moving average, right? You come back to retest it. If it holds, that means there's a very good chance it's going to continue to move that way. So in other words, here's a downtrend, right? So if we come back here to break through that 20 and change the trend, right? When we come back, a lot of times we come back to retest it. So we move a little forward, we come back, but here's a failure, right? It changes to a sell signal and it continues in this direction. It did not bounce off the 20 and continue going. Same thing here. It crossed, came back, failed, continued. Now here it pulls back, but it doesn't get below the 20. The 20 now acts as support. So a very conservative way to enter is you mark this high, and as soon as it breaks it here, you get in on that trade, right? You get a re-entry, you add some more, right? You get a re-entry, you add some more. And then on change of color, you're out of the full position, okay? So going back up here, when it crossed below, you did not have slope. Remember what you're looking for? One of two things. Either a break below a prior pivot. So this would have been the pivot here. If we break below here, okay, you can enter the trade. But look what happens. It goes back to test that moving average. And now the moving average acts as resistance and we break. So again, a clear entry could have been here and you could have taken advantage of this. Okay, would have been out here, taking advantage of that, out here, taking advantage of that, out here. And then you switch from here to here, in, and so on. It is that simple. Whether you're trading on the daily, on the weekly, on the monthly, a 5-minute, 1 minute, the rules are all the same. Let me know if any of you have any questions while I flip through more of the symbols. Peter was asking for, Peter was asking for Tesla, which we just looked at. Now we're looking for Palantir, for Shaw. Here's Palantir. Let's go to where we are now. Here we are. So every once in a while, you're going to see this here. Now, this is a gap on earnings. What we try to do is avoid earnings. Over my 35 plus years, I've never found a good way to predict which way the stock is going to gap after earnings. It's just impossible to know. So if we're in a position just ahead of the earnings, we want to exit that, and we don't want to be there for earnings. Okay, so let's ignore that. But again, if you focus on areas where there's slope, for example, here, this signal, there's slope in that direction, right? You enter and you follow through. Here's why it's important to take profits along the way. If we entered here and we exit on the color change, this would actually be a loss, right? This is something that a lot of traders do, especially when you first start and you're using just a moving average cross system. A lot of people think, well, if it crosses this way, I'll go short. If it crosses this way, I'll go long. Where they lose all their money is when it's chopping. See, it breaks above, you get stopped. You go short, you get stopped, right? You go long, you get stopped. Here, you go long again, you get stopped at the same level. Unless you have a very strong move up or a very strong move down, those moving average cross systems don't work for that reason. So focus on the areas where there's trend. Also, what we're going to teach you with this, let me find my drawing tool, is to identify channels like this. When you have a clearly defined channel, right? A couple of highs here, several lows here, you're looking for the break. And look at that clean retest right there. So even though when we got the buy signal here, right, there was no slope, we broke a prior high. See that? On that same candle. So that allows you to take that trade and you still participate in that. So we will teach you all of this. With the indicator, you will get training classes as well. And I've got an offer at the end here for you where you don't have to risk anything. Okay, we're going to allow you to test drive this for 10 days, absolutely free. Crowdsource. And I'll get to ANF in a second. Here's crowdsource. Look at this beautiful chart, right? Again, here we are. We can clearly define a channel here, right? And look for a break one way or the other. Now, if the 20 is flat, you don't want to take any of these signals. Look, if we had sold here, would have been stopped out here, loss. Gone long, got stopped out. Got long here, maybe we would have taken a little profit, but eventually got stopped out here and so on, right? When you focus on slope, right? Look at this one here, very close to the 20, nice slope. You look to your left, there's really no other activity, no overhead resistance, and boom, off it goes, right? You take a third, we'll tell you exactly where to set those targets. You get out here. You get back in. Is there slope? Yes. Boom. You add more here. It keeps going. So think of, for example, here we get in here. There's slope, right? Immediate stop out. But look at the size of the loss here, right? Or even here, if you got in here, you didn't take any profits, you got out here. Yeah, it's about a break even, maybe a small loss. Can those be overcome with these types of winners? Many of those can be overcome. And what I will tell you is that if you follow our rules and you're selecting the trades exactly the way I'm telling you, A, you will have more winners than losers, and B, your winners will be much greater than your losers. That's exactly what we're looking for. Here's A and F. All right. Another beautiful looking chart. Wow. Same thing. You can see the benefit of trading with trend and momentum is that you can really buy just about anywhere along this line and make money, right? Because when there's a strong trend and strong momentum and buyers are fully in control, right? They're pushing that price higher, right? The thing is, where do you enter in order to have an edge, in order to give yourself an edge and make sure that long term you are making more when you win than losing when the trade doesn't go your way? That's what this is all about. So it's the full plan. Not only will we teach you how to select your stocks and give you a strategy for entries and exits, but putting the right money management plan in place, having the proper way to track your trades so that you can go back and make sure that you're doing everything properly. Then after that, once you have it down, it's just a matter of rinse and repeat every day. I always tell my traders trading should be boring because you're doing the same thing every day. But when you're making money, it's really not that boring. So this is what you want to take. And again, whether you're on a daily, on a weekly, right? Look at these massive trades on a weekly, right? And even this pretty sizable trade, the monthly, right? Again, do we take this? If you were strictly trading on a monthly time frame, okay, you're an investor, you're just going to buy stocks and hold long term, and you want to know, would I have taken this trade? Well, initially, you have slope against you, but here's the prior high, right? So you wouldn't have got in on the buy here, but on the very next candle, once you broke that high, there's your entry, and that's your run, right? So that's great. Let me answer a couple questions. Ricky's saying, and you said this covers all time frames, so accommodate day trading. Yes, let me show you a couple. When you're day trading, you want activity, right? You want stocks that are in the news or that are very, very active. You need volume when you're day trading because you need movement. You're trading on a very small time frame. So, for example, let's go down to the 5-minute time frame. Okay, and Abercrombie here may not be all that active. Depends on the time or the news. But recently, NYCB, right, the New York Community Bank Corp, those regional banks that have been in the news, right? This is what I mean by movement. Because they're in the news, right? Having a lot more volume, you go on a shorter time frame and you're looking for those big swings back and forth. And then you're following the rules. Very simple, right? So do we take this trade here, this sell, right? 20 is completely flat. Tells us it's not an edge. Now we can look at a prior low, and if we break that low, we can get in, or we look for a test of the 20. Now it just so happens that it comes back to test the 20 and bounces right off it. But the algorithm also tells us that, hey, this is another good time to get in, and now they're slow. So we get in here, boom, we add some more, comes down, add some more, and exit, right? Now, when you add, if you're going to add, you've got to still make sure it's within your money management plan, right? Because remember, if you're going to put 5% of your account balance in any one trade, you can't put 5% here, another 5 here, another 5 here, here, here. Before the trade, you've got half your account in there, right? Something goes wrong, you're in for a lot of pain. So you've got to be within your money management plan to do that. But even if you just bought and held, right? Scaled out a third of your position, another third, and then let the final third run. That would be an amazing trade. And then it happens again and again and again, and then it switches direction. Now we have slope here. We've got to buy near the 20, and off it goes. If you didn't get in here, you can get in here, or you can add to it, etc. Right? It's the same thing. Costco is another stock that I like to look at on an intraday basis. Why? Because it moves. Now it's a very expensive stock, so it may be a bit much for you, but it just depends on your account size. But if you go back here, here's a textbook no-brainer trade, right? Nice and easy, anywhere with slope. And if we go back, right here, right, boom, right here, boom. I mean, this is what you want to do. You want to avoid the trades that don't match your criteria and jump on the ones that do. So again, it's not about what we miss, it's about what we catch. Look at this one. Nice and easy, right? You're looking at very few things. So it doesn't take long to learn this at all. And what we do is, and actually, maybe I should tell you about that now and then answer some more questions. First of all, Lawrence was saying, does this work on TradeStation? Unfortunately not. This is programmed on TradingView, which is what I'm using here, or Metastock. If any of you are Metastock users, we have it programmed on Metastock or TradingView. And let me share with you what we're offering today, and then I'll come back and answer more questions or look at more symbols. So if you go to tradingwins.com/start, what we're offering is our Trading Wins Pro membership. Okay. And we're offering a free 10-day trial here on the monthly plan. If you take the annual, there's a significant savings for that. But you can try us out for 10 days, totally risk-free. Now, what does this include? Well, it includes the victory indicator that I just showed you for TradingView or Metastock, your choice. So you get all those, entry exit signals, the re-entry signals, etc. Again, it works on all time frames, works on stocks, futures, forex, crypto, anything you like. Now, in addition to this, what we do with our members is we meet 3 times a week live on Zoom, just like this. We open our cameras, we talk about trade ideas. We analyze dozens and dozens of charts. We talk about different aspects of the market, what's going on with the economy, etc. And the whole purpose is to help each other learn and find some great trading opportunities. So 3 times a week, Mondays, Wednesdays, Fridays, we meet for a minimum of an hour at a time, usually more. In addition to that, we send out nightly emails. I'm going to show you an example of one. Here was our email that we sent out just, on the evening of February 6th for February 7th trading session. Okay. What we do is, and I write this, I give you a summary, a market summary of what happened in the markets that day. Okay. Then provide some market-related articles. These are all based on what's happening in the markets at that time, what I think is relevant for you to know. And then we have what I call our victory traffic lights. Now, what this does is, and I'm going to go back to the charts actually to show you this. Here, I have a watch list where I have the ETFs of the index charts, right? The Dow, the S&P, the NASDAQ, et cetera. But then from here, starting with XLE down to XRT, these are the different sectors of the markets, okay? So energy, financials, right? And let me go back to the daily so you can get a sense of how these work. The technology sector, right? etc. All the different sectors. These are the ones that we follow. And what you're looking for on this image is the daily, the weekly, and the monthly time frame. So if Victory is showing a green on daily, and it is showing green on weekly, and showing green on monthly, that means there is a strong trend to the upside. Okay. So this is the DIA, which is the Dow Jones 30 ETF. So the whole purpose of this is if there's a strong trend here, you can go into those 30 components that make up that index and look for setups with slope there. This will make it even safer and more likely of having success on that trade. You do the same thing with the S&P 500, the same thing with the NASDAQ 100, the Russell 2000, which is small caps. Here on the daily, we're still red, but weekly and monthly, we're long. What you will find if you're looking at the different sectors of the market is that with one quick glance, you can tell how much of the market is trending higher versus lower. There are times where this is completely green, or there are times like this where there are several sectors that are trending very strongly, like financials, techs, etc. And then here's one, utilities, that is doing the exact opposite. But this is a great thing because you don't want a portfolio of all longs or all shorts. If there's bad news one day and the market gaps against you, you're going to get hit on all those positions. So you always want a couple of positions in the opposite direction. But what this helps you do is identify where there's a strong trend lower. So your odds of making money on this and the other one at the same time are already high, right? So that's the benefit of this glance. And then in addition to that, I do a scan. I look at trade setups that I think I would take. Here we have our checklist that we look for. These are the 8 things that, unless we can check them all off, we cannot take that trade. And we're going to teach you these as well. You're going to get training videos that go along with the indicator that will teach you this in detail. Okay. And then if you're an options trader, we talk about what option strategy you can use, where your stop should be, where your take profit is, and so on. Again, these are not recommendations. We are not financial advisors. Okay. I'm not managing your money for you. You are completely responsible for your own money. These are trade ideas and examples to reinforce what we're teaching you. Okay. So I can show you on a chart, but nightly, I will give you several examples here. Depending on the night, there might be 1, there might be 2, there might be 4, some nights none. But I highlight trades that match what I'm teaching you. So A, it can save you time on your scan, and B, it's just repetition. You keep seeing it and seeing it and seeing it, and eventually you train your eyes, and you will know exactly what to look for on these. Okay, so again, tradingwins.com/start, and you're going to get the indicator. You're going to get those nightly emails 5 times a week, every Sunday to Thursday. And in fact, the Sunday evening one includes a video recap from me where I recap what happened in the markets the last week. I review those different sector charts, okay? Go over news that I think might impact the market and talk about where I think things are going for the next week. Also, as I said, just like today, we will meet 3 times a week live on Zoom, Mondays, Wednesdays, Fridays. Mondays, 1 p.m. Eastern, Wednesdays, 10 a.m. Eastern, Friday, 1 p.m. Eastern. If you can't make it and you have questions, you email me the questions ahead of time. I will answer them during the live Zoom call. You can watch the recording. You will get recordings of everything, and then you'll have your answer. You can also email me anytime you want. I'm going to give you my personal email address here. Okay. David has just put the link in the chat. Thank you for that, David. So let's see. There's a question. What are the conditions for re-entry? There is no difference. Let me bring up my chart again and show you. Okay. So For example, we got a buy signal here. That's the algorithm in behind the scenes where those indicators that we've identified line up. They're all pointing to a movement long. The same thing has happened here. So sometimes when you get in here and the stock pulls back, one of those indicators will fall out of line, right? And then when you get the signal again, it means it's come back into line. Both are pointing to a long trade, and that's what it is. So the reason why we call them reentries is if you just missed the original buy signal, or you determined that this wasn't a valid one, in which case, for example, this one was not a valid one, right? The 20 was fairly flat. We did not break a prior high. We had not retested the 20 yet, so it wasn't valid. Now you can enter here. Now here we have slope. We have everything we need. We get in. If you're more aggressive, you can add on every additional reentry if you want, and then exit on a changing color. Okay. So sometimes you'll see an exit flag. Sometimes you'll just see a sell. It doesn't mean that you should go short here. Again, you need to look at the criteria, right? Remember that email here, this list, this is what you're going to follow. This is what you're going to have beside you to trade with. Okay. So that is what you want to, how you want to treat the reentries. So I'm almost out of time. Let me just recap: tradingwins.com/start. Okay. And the two different options here. One is our membership plan is $197 a month, but now for this, anyone who's on here is going to get free 10-day trial. So you register. If you're not happy with what we have to offer, anytime before the 10 days are up, you can cancel from within your account, and there's no charge whatsoever. If you like it, which we really hope you do, you can stay on with us. If you're really happy, you want to upgrade, or you just want to take the annual now for the savings, you can do that as well. Again, it's tradingwins.com/start. You get the indicator, you get the 3 live Zoom calls a week with me, and you get nightly emails 5 times a week with the market summaries, with the relevant market articles, with the victory traffic light image, and the trade ideas when we have them. Ricky's asking for the email address. Thank you for reminding me. Here's how you can contact us. TradingWins.com is the website. Our main inbox, email inbox, is info@tradingwins.com. If you'd like to email me directly, it's just vince@tradingwins.com. Okay. So Lawrence was asking, as a member, you get full set of instructions on trading method. Absolutely. You get videos teaching you. What I taught you today was just a portion of it. You're going to get training videos that go through it in detail, and on the live Zoom calls. That's what they're for. Ask me any questions you like, even other trading topics. Okay. Thank you very much. I'm out of time. I got to hand it back to David, but I really appreciate it. I hope you enjoyed it. And David, thank you again for the invite. I appreciate it.